Hello, traders. It's Eve from MarketWizards.com. Saturday morning, the 10th of December, 2022. Reminding traders to use risk capital you can afford to lose. All right, we're looking at the December contract, and just a quick review. We had talked about in the last several weeks how we thought this was an important push to the long side, and as long as we could keep this low intact, probably the low for the year obviously would be in. It's still fairly dicey. We've had a substantial pullback. And I'd also said at the time that even if we broke this and went down, it doesn't mean we're going to go take out the low. So I still believe that probably the low is in for the year. We shall see what happens. But this fast up leaves very little support built up. So on pullbacks, it is possible once we break a formation to then come back and test these significant pushes and where they originated from. And we can see the first significant pullback stalls, bounces back, retests failure, comes back down. Here's your double, and then here's your third time through trade. It comes back all the way back down in big pivot 562.5. And then these two are the extreme levels based on this system, the predictive levels. And a reminder, these stay consistent. These don't change. These will always be these numbers. So if you're following along with me, then you want to pay attention to areas like this, 718.75, which was significant, obviously, on Friday, yesterday. So we'll keep that in mind as we look at a couple more charts. All right, here's a look at Friday's trade. We had obviously the news come out. Here was that scene of the crime. Very fast move. There's a 5-minute bar, but if you look at a 3-minute bar, you look at faster bars, you'll see that just how fast this evaporated. The market tends to get where it wants to go, short side, in a hurry. And then subsequent traders who are looking to think it's just a trend day down typically will get squeezed as we get towards typical half gap trade. And certainly there's no easy way to play this other than understanding the game, which is try to protect the low and try to get as many traders off sides as possible. And then when they least expect it, then go without them. And this is where I had suggested 512.75 was support. And then I noticed a stair step pattern in the trades where these were making higher lows, and then we get towards the end of the primary trade, which is done by noon, and then we chop around here, just trying to get to test this area. And from that last chart we looked at, we know 1875 is the pivot here. And that's really all this could do is get back to retest and the energy spent. Then we have a profit-taking swing during lunch, and this is the contra, and we go sideways. I did a measure from these highs to these lows, and this was your halfway trade, right? Coming into that 32. I suggested that this 32 area you're going to have to be paid by. And then the bounds should stall 75 to 85. So that's your halfway back for this trade. And then the 85 represented Thursday's high. That's why I thought this was resistance. So if you messed around in here, very, very tough trading, no direction. And then it makes the break late day where all of a sudden the traders that had a nice day and wanted more long side start to give it up. And the weeklies have already taken their profits. And then we come down, we close down towards the bottom, basically testing the RTH low. So this is a tough trade for conservative traders because it happens so late. But if you recognize the third time through trade, 1, 2, 3, then you can jump in, even if you're sidelined saying, oh, I don't like trading. And if you're willing to take the risk, and as long as you protect yourself, these traders are now trapped, and we're coming back to obviously test support. So that's a great trade, but the timing of it was tough for conservative traders later on a Friday afternoon. Here's a 2-day look, and I love 2-day looks. You can get more information if you're willing to do the homework. And this 1175 obviously was a pullback. 1, 2, 3, 4, 5, 6, 7, 8. We use 8 boxes. So anytime we come back into this second box, you've got to break that before going here, and obviously step by step. But from the highs all the way down here, this was the support that I had called, and that's the reason why I called it. Just throw this 1175, 12 area. Okay, 12 area support. We can see the bounce. We can see it then holds the 50 area, which is the next level up. The 90 to 600 area, that's a pivot 601. And we can see that holds and pushes up and gets all the way back up here into the top box. And this is the box you want to make sure you're paid in. If you're taking a long side shot here and you get a 5-box run, you want to make sure you're paid. Then we get the pullback, couple of boxes back, chop in here, and we can see this range, this 70 range. And I talked about 75 to 85. And you could see this is the primary box that's being resolved, and then we break this 30 area, and then it's lights out into the close, come all the way back down and test the RTH low. So you don't need just one chart. A lot of people like one chart with tons of stuff on it. As you can see, that's not the way I like to trade. I like to have some clarity in what I'm looking at. And I've got charts with moving averages and so on, but by and large, this is the style that I like. I like to see step by step, one box at a time, and see where we are. And these will fool you here and there because it's never going to stop just exactly at these numbers, but you try to get the feel for the rhythm. And if we've come from up above this line and we get down 2 boxes, then you want to think that it's going to come back, and you got to break this before you can get here. So this is very helpful to balance. And then I know how many points there are in the range too, and that's one of the things I use as a guide. All right, we're switching over to its rollover. So I plugged in all of my charts, did that actually yesterday at the end of the session. It's easiest to take a half an hour and do it then and be ready to rock and roll. So this chart is now depicting the fourth quarter with the values shown by the March contract. And again, I can see 1, 2, 3. We've pulled back 3 boxes. If we break this level in here, this level 5, which is a 40 back, right? Up 8, back 3 is a 40 back 4 would be a 50 back, and back 5 would be 60 back. So we're going to keep an eye on this. We've got, for now, these highs in here back at that 840 area, 845, and then back down here at these lows in here just above 1600. This is going to be the first rotation of consequence that we need to see, whether it can come back down and challenge these lows and get back to a 50 back, or in fact, if we can haul and push back up above here and come back to test that. So either way, right now, these 2 boxes are the most important 2 boxes to get resolved. And in a 3-box system, we're going to look at this blue box, this white one, or this white one for our next trades, and then take it from there one day at a time. Reminder, markets will thin out. Not that many trading days left. Traders will be taking off for the holidays. Most important to preserve our capital. So if we can find a few smaller trades that make sense and jump in with a runner, make a bit more, great. But by and large, enjoy the holidays with family. Don't overtrade, my best advice, and get our feet on the ground with a new contract before we start throwing a lot of capital at it. So I still believe the low is in for the year. You've got to take out not only the middle, but the 60 back. And that's usually hard to do all at one swing. So for now, signing off. Hope you have a wonderful weekend. Thanks for listening. Hope it helps you.